5 mistakes that I made during the 2008 market crash that I wanted to share with you guys and girls that you should avoid. All right. As we see the market take a downturn in 2020, I see a lot of people out there, some people becoming scared and timid. And I even caught myself kind of repeating or having that sentiment that I had back in 2008. So I'm going to share you exactly my story and the 5 mistakes that I made and how you should avoid them. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So let's jump straight into it. So first, before I get into my 5 mistakes, let's first talk about the sentiment of what was going on. 2007, 2008, I was in Iraq. I was single. I was not married. I didn't have any bills. I had no debt. I had a lot of money coming in. Plus, I didn't have, I was in a place to where you couldn't spend a lot of money. So I used to ask myself, where can I put this money? Where can I go? How can I start investing? Where do I need to put this money? Right? And I couldn't find anywhere to do with this money. I said, hey, I have money saved. I have no debt. How do I invest? How do I start investing? So I started asking around. I started doing some searches or whatnot. And back then, we didn't have YouTube University. YouTube University wasn't as developed as it is today. So what I was doing was, and then plus the phones back then, we just pretty much had Blackberries. We didn't really have like smartphones, so you can get a lot of information off your phone like we can today. So I know I'm talking about like it was 1920, but it didn't. People who were back then didn't really, iPhones wasn't really out back then like they are now. So everybody had Blackberries. So one of the guys told me, Prince, you should look into buying stocks, right? And I said, you know what, that might be a good idea. Because in 2006, 2007, as the market was going up, I heard of a lot of people making money from stocks. I heard a lot of people making money from investing. I heard a lot of people making money from just, real estate, all of that. So I said, man, I need to get into this game. What's the easiest way to get into it? So a guy said, hey, call this particular company and see what they have to say. So I called this company, and this company set me up with a mutual fund. And when I brought the mutual fund, I told my mom. My mom said, stay away from that investing stuff. You don't know what you're doing. You're going to lose your money. I said, well, my mom was born into the 40s. I want to give it a try because I'm the first generation or the first investor in my family. So, my family wasn't big on that. Their thing was to save and retire, collect a pension. That was their thing, which it worked for them, but I wanted to try something different. So what ended up happening was I get set up with a mutual fund in a large cap. I didn't know what an ETF was. I didn't know what an index was. I didn't know what dollar cost averaging was. The guy just told me, hey, you're a young man, invest into this large cap mutual fund. So I put about $15,000 in it, I think it was back then. So I put money into the mutual fund, and he said, hey, invest into it every single month. I said, okay, sure. So here I am. I'm excited now. I got my money now. I'm investing every single month. And as I turn on the television, all I see is we was in Afghanistan, we was in Iraq, we was in Ford filed bankruptcy, General Motors filed bankruptcy, Bank of America was on a verge of filing bankruptcy. All these financial companies, gas prices was through the roof, unemployment was through the roof. We were going through a presidential election. Obama was coming in office, going against McCain. It just seemed like the world was coming to an end, and I didn't know what was happening. I didn't know what to do. So here are the 5 mistakes that I made during that time frame. So the first thing was I was financially illiterate. I did not know the business cycle. I did not know what a trough, an expansion, a peak, and a recession, back to a trough. I didn't understand that. I didn't understand that I was catching the market as it was going into an expansion, that a peak would happen, that a recession would come. I didn't know that. I didn't know what a recession really was. I didn't understand it. Number 2, I got so panicky when I saw I was putting money into this account and I would log in every single day and I just saw my money going down, 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 down. I panicked and I sold. Right. So my mistake number 2, something you never do in a down economy, is sell. Right. In general speaking. So I started to sell and I took a loss because I didn't want to lose any more money. I said, well, I lost enough. And what was playing in the back of my head? My mom telling me, son, don't get into investing because you're going to lose your money. You don't know what you're doing. So that played in the back of my head. Selling was number 2. Number 3 was as the economy started to erode and decline even more, and we kind of got to the bottom. Nobody knows what the bottom is, but I didn't know what to buy, right? Nobody told me and said, Prince, you can buy a mutual fund. Prince, you can buy an index fund. I didn't know what to buy. So by me not knowing what to buy, I didn't know how to take advantage as the market took a downturn. So the thing is, know what to buy. Know what's out there to you, right? Don't start off with all the risky stuff. And that's another thing I did. I wanted to jump into penny stocks because it was cheap and it was easy to get into. I wanted to start with the more riskier things when I should have took the large cap, easier route. So not knowing what to buy when the market took a downturn was another thing, a mistake that I made. Number 4, dollar cost averaging. Dollar cost averaging is the concept of buying something consistently over and over and over. I was perfectly fine with putting money in as long as I was making money. But the second that my money didn't move and it started to actually decline, I wasn't cool anymore with dollar cost averaging as the market was going down. But I was cool with it as long as it was going up. So a mistake that I made was as the market was declining, I should have dollar cost average even more as the economy was declining. But I didn't do it. I was scared. I didn't know what was going on. I thought literally the world was coming to an end. Number 5, what made me feel this way? Too much media. I had too much CNN. I had too much news coming to me, and that was caused those knee-jerk reactions. All I would see is turn on like you're seeing today. Dow Jones dropped 2,000 points. Trading is halted. This company files for this. This going on with this company. You know, the election. This person got the coronavirus. Death tolls are rising. This. Airlines are doing it. I had too much negative news coming to me. I had so much negative news. I didn't know how to filter it out. I thought, man, I've never seen this before, so I wanted to jump somewhere else. Not understanding that during crises is when ratings go up for media outlets, and they capitalize on that. They capitalize on crisis. Like the old saying, if it bleeds, it leads. Meaning that if there's blood involved, it leads because people pay attention to that. So I didn't understand that stuff. I'm 23, maybe at that time, 24, 22, somewhere in that age frame, and I didn't understand it. So too much media. I didn't have people like you're tuning in myself to talk to. Wasn't any podcast. YouTube wasn't really developed. So I didn't have that rich uncle that I can call. So too much media is what caused me to sell, not want a dollar cost average, all those things like that. So my top 5 things was 1, financial literacy. 2, selling. 3, not knowing what to buy. 4, being scared to dollar cost average as the market was going down, buying more and more and more. And 5, watching too much media and not understanding it. So those are my 5 mistakes that I made in 2008. Hopefully